Hey traders, welcome back to the channel. In today's video, we'll be diving deep into the Australian dollar versus the US dollar on the 4-hour chart. If you're wondering if this pair is ready to reverse or if the bearish trend will continue, you've come to the right place. Stick around as we analyze both the technical setups and the fundamental factors shaping the market's movements. Let's begin with the technical analysis. Looking at the 4-hour chart for AUDUSD, we can see that this pair has been in a downtrend for quite some time. How do we know this? Well, it's because the price has consistently been making lower highs and lower lows on the higher timeframes. This confirms that the prevailing trend is bearish. So, what are we seeing now? As we zoom in, notice how the price has recently rejected from the upper trendline resistance. This could be a crucial point where the market is indicating a possible continuation to the downside. When the price fails to break through a key resistance level, it can often signal that sellers are in control and the price may move lower. Now, here's what we're watching closely. If the price closes below this marked range on the chart, this would give us a clear signal that the market is ready to continue its downward movement. This would be a potential short entry point. On the flip side, if the price breaks and closes above the recent high, we could be looking at a shift in momentum. In that case, we'd consider buying from the breakout level. But for now, based on the current market structure, we're leaning towards short positions. The current rejection from the trendline is crucial because it confirms the bearish pressure. For a short position to be valid, we need the price to show further weakness by closing below the marked level. That's when we'll be looking for that opportunity to enter a short trade. Fundamental analysis, RBA overview. All right, now that we've covered the technicals, let's dive into the fundamentals driving the Australian dollar. The Reserve Bank of Australia, or the RBA, has been in a cautious yet hawkish stance lately, especially in light of rising inflation concerns. In the September quarter, inflation came in higher than expected, with underlying inflation at 3.0% and headline inflation at 3.2%. This is significant because it suggests that inflationary pressures are still persistent, which could influence the RBA's future policy decisions. Despite these concerns, the RBA kept the cash rate unchanged at its most recent meeting, signaling that the central bank is cautious but not ready to make drastic moves just yet. The key takeaway here is that although inflation remains elevated, the RBA is trying to balance its stance. They recognize that monetary policy remains slightly restrictive, which could put downward pressure on growth, but they are also mindful of the risks associated with prolonged inflation. Given these inflation risks and tight labor market conditions, we can expect that the RBA will remain cautious but still have a hawkish bias. This hawkish outlook could continue to support the Australian dollar in the long term, though the market sentiment right now is dominated by global risk factors. Global risk outlook and USD impact. Now, let's talk about the broader global outlook, which is having a major impact on the AUD-USD pair. The US dollar is currently strengthening, largely due to the Federal Reserve's decision to keep interest rates higher for longer. The latest signals from the Federal Reserve indicate that there is a smaller chance of a rate cut in December, which is pushing the USD higher. Moreover, weak trade data from China and signs of slowing global export demand are also putting pressure on risk-linked currencies, like the AUD. These factors create a risk-off environment where investors prefer safe haven assets like the USD, JPY, and CHF, while commodities and risk currencies like the AUD are taking a hit. Global risk sentiment. This global risk-off sentiment is adding fuel to the downward pressure on AUD-USD, especially since Australia's economy is highly tied to global trade and exports. As global demand weakens, the Aussie dollar suffers. Looking ahead, there are a few key releases that we'll be keeping an eye on in Australia, particularly construction work done and private capital expenditure. These data points will give us a better understanding of investment activity and momentum within the economy. But overall, the market seems to be focused on global concerns, especially with the slowing global export demand. Conclusion: technical plus fundamental bias. To sum everything up, the technical analysis is suggesting bearish pressure on the AUD-USD as price is currently rejecting from the upper trendline resistance and showing signs of weakness. we'll be watching for a potential breakdown below the marked range for a short entry. On the fundamental side, the RBA's hawkish stance, combined with global risk factors and a stronger USD, is supporting the bearish outlook for the Aussie dollar. So, with both the technical and fundamental outlook pointing in the same direction, we're looking for short positions on AUDUSD, at least in the short term. However, if the price breaks above the recent highs, that could be a game changer, and we'd consider buying from those levels. Now, it's your turn. What do you think about the current setup on AUDUSD? Are you also leaning towards a short, or do you see a potential reversal in the making? Let me know your thoughts in the comments below. If you found this analysis helpful, don't forget to like this video and subscribe for more in-depth trading analysis. Hit the notification bell so you never miss an update. As always, trade smart and stay ahead of the market. Thanks for watching, and I'll see you in the next one.